Hello everyone and welcome to Perry Finance. Today, we will apply some microeconomics principles in an attempt to predict BTC price on a mid and long-term time frame. BTC price has been moving within a broad range since March, a sideways trend, bringing a mix of emotion. But before we continue, a brief reminder. This video is not a financial advice. The information provided is for informational and educational purposes only and should not be relied upon as a substitute for professional financial advice. Okay, time to move ahead. Today's content comprises a brief definition of economics. The objective is to establish common definitions of concepts in order to speak the same language. The supply curve concept, Bitcoin halving explanation, and the effect of Bitcoin halving on the supply curve. Then we will review the demand curve, the Spot ETF, which was approved on January the 10th this year, and the effect of the BTC Spot ETF on the demand curve. Finally, we will explore the logical conclusion on the joint effect of the both events of BTC mid and long-term price action. So let's dive in. Economics is a social science that examines how people choose among the alternatives available to them. It is social because it involves people and their behavior, and it is a science because it uses as much as possible a scientific approach in its investigation of choices. All choices mean that one alternative is selected over another. Selecting among alternatives involves three ideas central to economics: scarcity, choice, and opportunity cost. This definition was sourced from Principles of Microeconomics by Levi Rittenberg and Timothy Threegarten. Now we have agreed a definition that provides common framework, and we can step forward to explain the supply curve. What determines the quantity of a good or service sellers are willing to offer for sale? Price is one factor. The higher price, more sellers are willing to offer a greater quantity of a good or service. Production cost is another determinant of supply, and another factor affecting the quantity of a good that will be offered for sale is the number of sellers. The greater the number of sellers of a particular good or service, the greater will be the quantity offered at any price per time period. We can derive from the previous statements the concept of quantity supply, which is defined as the quantity sellers are willing to sell of a good or service at a particular price during a particular period. All other things don't change. So, in general, when there are many sellers of a good, an increase in price results in an increase in quantity supplied, and this relationship is often referred to as the law of supply. And then, for any price, there is a specific quantity supplied. This is the concept of supply schedule, and the graphical representation of the supply schedule is the supply curve. Here we can see a generic supply curve, the supply quantity on the horizontal axis and the price on the vertical. Note that they are generally positive. It means upwards sloping, as an increase in the price will motivate more sellers to sell. Now, when we draw a supply curve, we assume that other variables that affect the willingness of sellers to supply a good or service are unchanged. It follows that a change in any of those variables will cause a change in supply, which is a shift in the supply curve. A change that increases the quantity of a good or service supply at each price shifts the supply curve to the right, and a change that reduces the quantity of a good or service supply at each price shifts the supply curve to the left. As the supply curves generally are upward sloping, a shift to the right brings a bigger quantity supplied for a given price compared to the previous curve, and a shift to the left brings the lower quantity supplied for a given price compared to the previous curve. A variable that can change the quantity of a good or service supplied at each price is called a supply shifter. And here we have the Bitcoin halvings. The Bitcoin halving takes place about every 4 years and reduces the block reward by 50%. This lowers the supply of Bitcoins entering the market, which increases scarcity and can act to raise its price if market conditions remain the same. Block rewards are part of the Bitcoin blockchain's automatic process of validating transactions and opening new blocks called mining. Miners, the participants who compete in a race to solve a cryptographic puzzle, are given new Bitcoins if they are the first to solve it. Their block is added to the blockchain. They receive a reward, and the network starts another race. All miners confirm the data in the newly added block while trying to solve the puzzle for their own new blocks, hoping for an ever-decreasing reward. Most recent halving occurred in April the 20th this year and reduced the reward from 6.250 BTC per block to 3.125 BTC per block. Bitcoin halving is a supply shifter that shifts the curve to the left, increasing the equilibrium price for the very same quantity of the previous scale. Done with the supply side, let's move to the demand side and explore the demand curve. Each good or service has its own special characteristics that determine the quantity people are willing and able to consume. One is the price of the good or service itself. Other independent variables that are important determinants of demand includes consumer preferences, prices of related goods and services, income, demographic characteristics such as population size, and buyer expectations. On a similar analysis as performed on the supply, we can perform on the demand. Therefore, the quantity demanded is the quantity buyers are willing and able to buy of a good or service at a particular price during a particular period. All other things unchanged. This quantity demanded, once related to different prices, bring us the demand schedule, and the graphical representation of the demand schedule is the demand curve. Demand curves are generally downward sloping, therefore, the negative slope of the demand curve suggests a key behavioral relationship of economics. All other things unchanged, the law of demand for virtually all goods and services, a higher price leads to a reduction in quantity demanded, and a lower price leads to an increase in quantity demanded. A change in demand is caused by a change in a demand shifter, and as well as on the supply sides, these are variables that can modify the demand and shift the demand curve. An increase in demand is a shift on the demand curve to the right. A decrease in demand is a shift on the demand curve to the left. On January the 10th this year, the SEC approved several BTC Spot ETF. These funds open the possibility to access BTC for many investors unable before to hold it due to regulations. A Spot Bitcoin BTC, an exchange-traded fund, is a type of investment fund that tracks the price spot of Bitcoin. This means that the fund holds a corresponding amount of Bitcoin to back every share of the ETF, making it a direct investment in cryptocurrency. Key features of Bitcoin Spot ETF are: they track the spot price of Bitcoin, holds a corresponding amount of Bitcoins to back every share, offers a regulated and liquid way to invest in Bitcoin, can be traded on a major exchange like stocks, and typically has a management fee and brokerage fee. The Bitcoin Spot ETF shifts the demand curve to the right, increasing the price for the same quantity demanded on the previous schedule. Together, this couple of events that occur on a very close date this year have an effect we're going to explore. The premise number one states that Bitcoin halving reduces the supply and shift the supply curve to the left, increasing the equilibrium price for the same given supply quantity compared to previous schedule. Premise number two, Spot Bitcoin ETF increase the demand and shift the demand curve to the right, increasing the equilibrium price for the same given demanded quantity compared to previous schedule. In conclusion, both events will produce an increase of the price and restrict the probability to dip lower future price. We have entered a new reality with digital assets being recognized by traditional finances and Bitcoin as the most dominant asset on his class deserve careful analysis.